Ever wish you could just, quickly get the real story on a company's finances, understand its strengths, maybe where it's headed?
Yeah, exactly.
Well, today we're doing just that. We're diving into McDonald's Corporation, ticker MCD.
Right, MCD. Closed recently at $315.72, up a bit that day.
So we sifted through the stock reports, the earnings call transcripts, news articles, all that stuff.
And the mission today is pretty straightforward. Give you a focused breakdown of McDonald's, sort of where they stand financially right now and what the outlook seems to be based on all this info.
Okay, let's kick off with how the market's looking at them. Stock performance.
Sure. So the 52-week range is pretty wide, actually. $243.53 on the low end, up to $326.32.
And that recent close, $315.72, where does that sit relative to, say, fair value estimates?
It's actually just a bit above the fair value estimate we saw, which was around $307, give or take.
Interesting. And what are analysts saying? Price targets?
Well, there's definitely a mix. You've got Daiwa Securities adjusting to $326. Loop Capital's higher, $346. Argus is thinking $350. Okay.
But then Bofus Securities is a bit more cautious at $316. Redburn Atlantic at $319. UBS is back up at $350, though.
So quite a spread there. What's the average target looking like?
The average, looking at the last 6 months or so, comes out to about $340. So generally optimistic, wouldn't you say?
Yeah, definitely leaning positive overall. And beyond price, there's this concept of the economic moat, right? McDonald's is rated wide.
Exactly. Wide moat. And that's huge. It basically means they have significant advantages that protect them from competitors. Think brand recognition.
The golden arches. Everyone knows them.
Right. And their massive global scale. These things make it really tough for others to muscle in. The sources talk about the resiliency of the brand, high customer satisfaction. That all feeds into that wide moat.
Makes sense. Okay, let's get into some key financial figures. Trailing 12 months, TTM.
All right, market cap, $225.76 billion. That's, the total value of their shares.
And enterprise value, which includes debt and cash.
That's higher, $276.63 billion.
Yeah.
Gives you maybe a fuller picture. And how about performance? Revenue.
Over the last year, $25.71 billion in revenue.
And profit. Net income.
$8.16 billion. Which leads to an EPS, earnings per share, of $11.33.
And looking forward, any projection on that?
Yeah, the forward EPS estimate is a bit higher, $12.33. Suggests analysts expect some earnings growth.
Good to know. And dividends. A lot of people look at McDonald's for that.
They do. The current dividend yield is 2.18%. That works out to an annual dividend of $6.88 per share.
And they pay quarterly, right?
Yep. Last payout was March 3rd, 2025. The next one is expected around August 4th, 2025.
Okay, thanks. Let's shift to their most recent results. Q1 2025. How did that look?
Well, it showed some of the pressures they're facing. Global comparable sales were actually down 1.0%.
A decrease.
Yeah, but there's a little asterisk there. If you take out the effect of leap day from the previous year, sales were essentially flat. So not growing, but maybe not as bad as that headline number sounds.
Right. And what's behind that flatness or slight dip?
It really reflects the challenging industry environment, particularly tough for, lower and middle income folks in the U.S. Budgets are tight.
We saw that directly in the U.S. numbers.
We did. Comparable sales in the U.S. were down 3.6%. And significantly, guest counts were negative. Fewer people coming in.
Ouch. But I thought I saw something about them doing better than competitors.
You did, and this is a really key point. Despite those lower sales in the U.S. and their main international markets, McDonald's actually had a positive gap in guest counts compared to their competitors.
Meaning fewer people left them than left the competition.
Exactly. Suggests their focus on value and affordability is working to some extent. Things like that U.S. McValue platform, the $5 meal deal people are talking about, it's keeping some customers loyal, even if overall traffic is down a bit.
Interesting dynamic. How about the other international markets, the developmental licensed ones?
That was a brighter spot. Those markets, like the Middle East, Japan, they saw comparable sales growth of 3.5%. So strength there.
And they're not just relying on value, right?
Yeah.
New products, marketing.
No, definitely not. They launched McCrispy chicken strips in the U.S. Snack wraps are apparently planned. And big marketing pushes, like that partnership with the upcoming Minecraft movie, trying to drive excitement.
Yeah, I saw that. And they've made some internal changes, too. Category teams.
Right. Setting up specific teams for beef, chicken, and beverages. The idea is likely to, sharpen their focus, improve execution in those key areas.
Makes sense. And overall, for 2025, did they change their outlook after Q1?
Nope, they reaffirmed their full-year financial targets. And interestingly, they now expect a slight tailwind for EPS from foreign currency translation, a small positive boost.
Okay, so bit of a mixed bag in Q1.
Yeah.
Challenges, but also some resilience. How does this translate into analyst views, the bull versus bear cases?
Well, the bulls, the optimistic ones, they're really leaning on that resilient brand we talked about, the strong business model. They like the strategic focus on value leadership.
Getting ahead on affordability.
Right. And they point to the innovation pipeline, efforts to improve execution, and that global diversification, especially the strength in those IDL markets.
Okay. And the bears, what are their main concerns?
The bears are definitely worried about those macroeconomic headwinds, the pressure on consumers. They also see intense competition.
It's a tough market out there.
For sure. And some specific market weakness, like the UK was mentioned, plus cost pressures, commodity inflation, especially noted in Europe. And there's always a risk with value strategies. Will they actually bring in new business or just get existing customers to spend less? That's a key question.
Yeah, the incrementality challenge. Okay, let's dig into the Q1 earnings call itself. Any other key insights that stood out?
Definitely. They really emphasize that pressure on the lower and middle income consumer in the U.S. It was a recurring theme.
Understandable given the U.S. comp sales?
But they also heavily highlighted that positive guest count gap versus competitors. That was their counterpoint, showing their value strategy is having some positive effect, attracting or retaining customers better than rivals, even if sales are down.
And the McValue platform is central to that.
Absolutely. Big focus on value and affordability. Plus, those new product and marketing initiatives we mentioned, Minecraft Meal, McCrispy Strips, all aimed at driving traffic and engagement.
What about that beverage category team? Anything more on that?
Yes, actually. They specifically called out beverages as a significant growth opportunity. They mentioned learnings from their separate Cosmic Keys test.
Ah, the spin-off concept.
Right, and they're planning to apply some of those learnings to beverage offerings within their regular McDonald's restaurants in the U.S. A test is planned, so they see potential there.
Interesting. And the organizational changes.
They talked about the global restaurant experience team and those category leaders, beef, chicken, beverages, all designed to improve execution, speed things up, get ideas to market faster.
And customer satisfaction. How's that holding up?
Surprisingly strong, actually. They said customer sat scores are at all-time highs in the U.S. and in nearly all their major international operated markets.
Wow. Even with the sales pressures. That speaks to the brand loyalty again.
It really does. And as we said, they reaffirmed the full-year targets despite the Q1 softness. But they were clear about the risks, too. Macroeconomic uncertainty, inflation, making sure the value programs work effectively, and turning around performance in the UK.
But overall, the tone sounded confident long-term.
Very much so. Strong confidence anchored in the brand strength and what they call the three-legged stool system, that balance between the company, franchisees, and suppliers. It's been their foundation for decades.
Got it. Okay, shifting slightly, were there any other interesting news items floating around that add context?
A few things caught our eye. Less about McDonald's directly, but one piece mentioned big banks scrubbing public mentions of DEI efforts, just, context on the broader corporate environment.
Okay. Anything more specific to food or McDonald's?
Yeah, there were some discussions apparently around McDonald's and potentially using beef tallow again, the way they used to cook fries. Generated some buzz.
Oh, interesting. Potential shift there.
And another article talked about adults increasingly embracing kids' menus, a shift in consumer habits, maybe. Also, loyalty programs like their Monopoly game in the UK and similar things in the US highlighted as really top-performing campaigns for engagement.
Right, those are always popular. And the Minecraft movie partnership again.
Yep. So these bits and pieces kind of show the wider landscape McDonald's operates in, changing consumer tastes, supply chain chatter, the importance of loyalty. It's all part of the puzzle.
Okay, so let's try to wrap this up. What's the key takeaway here?
I think the main thing is that McDonald's is clearly navigating a pretty challenging economic time, no doubt about that.
Yeah, the headwinds are real.
But they're leaning heavily on their core strengths, that incredibly powerful brand, their global reach, and a renewed focus on value to stay competitive. They're also pushing innovation with menu items and marketing.
So facing challenges, especially with sales in key places like the U.S.
Yeah.
But still showing resilience. And analysts seem cautiously optimistic long-term.
That seems fair. Cautious optimism. They acknowledge the short-term bumps, but still seem to believe in the underlying strength and adaptability of the business.
Which leads us to a final thought for you, the listener. As you watch McDonald's going forward, maybe consider this. How effectively can their adaptability and that huge global footprint help them navigate these changing consumer preferences and economic pressures?
And maybe also, what does this intense focus on value mean for their profitability down the road? And how does it shape how people perceive the McDonald's brand over the long haul? Is it just the cheap option or something more?
Definitely some interesting things to chew on there. Look, if you found this focused deep dive into McDonald's helpful and want more insights like this,
Then you should definitely subscribe to our YouTube channel. We do these concise analyses regularly.
absolutely. And please hit that bell icon too. That way you'll get notified right away when we release new content. It really helps us out.
It does. Your support lets us keep doing these deep dives.
Well, thanks so much for joining us as we unpacked a McDonald's today.
Yeah, thanks for tuning in.
We'll see you on the next one.